In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing some upward momentum today. We are seeing them bouncing back after a couple of days of giving up a little bit of ground and pushing back down towards the 134 handle. We're back in the middle of the 134 handle today, 134.15, and hovering just off of the recent closing highs, actually, when you look at it over the course of the last couple of weeks for the 10-year note futures. And I think a couple of reasons why we're seeing this renewed strength today. Number one, the data points this morning came in maybe for the most part a little bit lower than expected once the market had a chance to digest them. The PCE data points initially this morning basically showing inflationary pressures, and the Fed certainly keeps a very close eye on these PCE numbers. Came in a little bit below expectations. Still elevated when you look at it from a historical perspective, but lower than the expectations coming in. And that counters some of the numbers or some of the data points that we have received the last couple of weeks where we did see the CPI and the PPI come in greater than expected. So again, a little bit of a moderation there maybe today, and that's why we're seeing some strength in treasury markets. Couple that with consumer sentiment numbers that came out later in the morning, and once the market had a chance to digest that, that's when we really did see a pop in the treasury markets after those 9 o'clock Central Time numbers came out, that the market did catch a bid and looks like it held on to most of the gains throughout the rest of the session. Currently looking at the yields, we're looking at 123 basis points on the 10-year. So near the low end of the range when you look at it from a longer term perspective. We did get to 113 basis points a couple weeks ago in an intraday spike, higher in treasury prices and yields going lower. But for the most part, this is the low end of the longer term range when you look at the last couple of weeks, let alone the last 5 months. Also, the yield curve is flattening today as we're seeing the back end of the curve down. We're seeing the middle of the curve down just as much as the back end of the curve. So the entire curve is shifted lower, really from the 7s all the way out to the 30s by about 3 basis points today when you look at the entire yield curve shifting lower as prices are being bid up in the treasury markets.